Hi, my name's Steve from Promise Money, and today I'm going to talk about interest rates, mortgages, buying property, specific to right now, which is end of November, early December. Now, the first thing I've got to say is I'm going to talk very generically. This is not personal advice, because every single person who's thinking of taking out a mortgage needs to get advice which is specific to them. So this is very just generic, a feel of what's going on. So let's just look at a couple of factors that we're dealing with at the moment. The first is we've got increasing inflation, and the government, Bank of England, control inflation, whether you agree with it or not, by increasing base rates. So that's going on at the moment, and a lot of that inflation is caused by external factors. So base rates are going up, which obviously affects the cost of mortgages, and it's gone up quite a lot. The second factor that we've got going on is the instability that we've had of late in the UK economy, the lack of confidence, and that's affected what are called swap rates. And these are the long-term rates which govern what people can lend fixed rates at. So with swap rates going up because there was a lack of confidence in the UK economy, fixed rates went up accordingly. And only weeks ago, if we were talking about fixed versus variable, we would have said, look, fixed rates are so wackily overpriced because there's lack of stability and confidence that you're better off going for a variable rate, because the fixed rates were just really, really high. But the good news is fixed rates are coming down. Confidence is coming back, and whereas I guess an average 5-year fixed rate only a matter of weeks ago would have been probably 6%, topping out at over 6.5%. We're now seeing 5-year fixed rates under 5, so 4.8s, 4.9s are starting to happen. That's a massive, massive change. So what does that mean? Well, that means if you're on a variable rate, you're going to be affected because it's following the base rate, and that could go up, it could stay as it is. But fixed rates are now more attractive. So if you're in a scenario where you're thinking, well, should I remortgage? Is it a good time? Well, it could be. Or I'm looking to buy a property. Is it a good time? Well, yes, it could be. And is a fixed rate a good idea? Yes, it could be. So let's just explore that for a second. Firstly, talk about property. Property has been going gangbusters. It's been going up and up and up for a long, long time. And with what's gone on recently, the market has stalled. So there are properties out there which are not selling as well as they were. They're not getting snapped up. So that's giving us a little bit of pause, an opportunity to maybe buy a property that you're not fighting 10 people with, you might be fighting 2. Or there might even be some on the market where people were going to sell them and they're desperate to sell. So it's an opportunity to probably pick up property at a reasonable price at a time when fixed rates are now starting to come down. But let's just also throw into the equation, the government changed the stamp duty rules very, very recently, and that means that roughly a third of the properties in the UK, there's no stamp duty on them. So it's going to cost you less to buy a property in stamp duty tax. You might be able to get a better deal, and fixed rates are coming down. Yes, variable rates have gone up, but fixed rates are coming down. So it's a question of, well, do you want to wait until variable rates go down, which could be, you could be waiting your lifetime for that, to be quite honest, because they're, compared to where they were, they're still relatively low compared to where they were 10, 15 years ago. So if you're in the market to buy, actually now could be a quite good time. And if you're going to get into a fixed rate, well, if the government doesn't control inflation via base rate rises, then the base rates could go up, in which case now is a good time to get into a fixed rate. So there's an awful lot going on, there's a lot to think about. The key thing here is you've got to take advice which is specific to you and what you're looking to do right now. And if you're looking to remortgage, I think it's fair to say that the rates are better now than they were weeks ago. Are they going to get any better? I think they might, just a little bit. I think in the course of the next few weeks and months, provided base rates don't go up, then yes, I think there's an opportunity to probably get yourself back into a fairly decent fixed rate. But then you've got to look at the wider picture, I suppose, is, well, will the government control inflation? without increasing base rates. And there are some people who are saying, well, we could see base rates as high as 6% in the next year, and there are others who are saying don't be ridiculous. So who knows? You know, we've got experts everywhere. I'm not one of them. I'm just telling you what I think. But it does seem to me that inflation is not being caused by us all rushing around getting excited by how much cash we've got and spending it. It's caused by external factors. So increasing base rates to stop us spending, well, don't worry about that. The cost of everything else that's external, like your fuel and food that's coming from far away, those are the things that are causing inflation to go up, and we're all being careful anyway. And there's too many people rushing around spending lots of money at the moment. If you go to the pubs, you'll notice that they're fairly quiet, as are the restaurants. So right now, rates coming down. Keep an eye on it. I think they're going to come down further. Properties, not necessarily a bad time to buy. Stamp duty makes it even a good time to buy. What's the long term going to be? Who knows? But I don't think it's all doom and gloom. I don't think now is a bad time. So if you're at a place where you do need to move, you want to move, have a look at it. I guess one of the key factors here is with interest rates going up, that increases cost of the mortgage. If the mortgage is going to cost you more, if you're one of these people who possibly could only just afford a mortgage 2 months ago, you might struggle to afford it now. And that's going to be worked out for the lender for you, but you need to have that in your mind as well. You know, do you want to be taking on a mortgage now? If it was already going to be a stretch, do you want to be stretching at a time like now? If you're going to do that, then you need to be thinking fixed, because you're going to want to have that security going forward. But as I say, this isn't personal advice for anybody. This is just a general feel what's going on at the moment. I feel a lot happy about the market. I feel a lot happy about the mortgage market. And I feel a lot happy about how consumers are feeling at the moment. And I think over the next few weeks, that's going to filter through. So I hope I haven't confused. I hope this has helped. Just keep watching out for the next video, because as things change, we'll try and tell you what's going on and give you a bit of inside information for what we think's happening. Talk to you soon. Check us out on promisemoney.co.uk or go to our YouTube channel and subscribe. You might already be there now. Do subscribe, do like, so more people get the chance to watch these videos. Thanks a lot. Bye-bye.